Walk us through what happened. What happened today?
So at 11:32, the NYSE had technical problems with its FIX system, its financial exchange system that it uses to allow buyers to speak with sellers, to allow brokers to speak with the NYSE and specialists as well. So these handheld devices didn't work, and they had to stop trading. They canceled all orders, sent them all back to the brokers, and then didn't reopen until 3 hours and 40 minutes later at 3:10. It was, at least in my experience, the longest halt on the New York Stock Exchange for a technical glitch that I've seen, although Art Cashin was saying a little bit earlier that they've happened before and they've had even longer stoppages, but not in recent memory. So a real blow to confidence, but the good thing that you could take away from this is there was a lot of price stability. There wasn't a lot of price discrepancy. There weren't the problems that you saw when Knight had its glitch or when Bats had its glitch, and volume continued as brokers were able to route orders. I mean, Joe will tell you, both Joes will tell you that they route orders to a number, maybe even a dozen other lighted exchanges around the country, and because of that, they didn't have any issues with volume or price.
Okay, so let's start with Joe number one, Joe Saluzzi, joining us on the phone. Joe, did high-frequency trading play a role here?
I can't say they did or they didn't. You know, we don't know the post-mortem here from the NYSE, but this was a technical issue, as Matt said, at the New York Stock Exchange. You know, whether or not a flood of orders comes through or what caused the outage, you know, we'll find out later on when NYSE comes out with something. But the bottom line is we do have an equity market that is excessively complex and actually unnecessarily complex. And some people are arguing that the fragmentation of the 11 stock exchanges and 40 dark pools was actually a good thing because you were able to fail over to a different system. That is totally false. You know, competition is a good thing, but excessive fragmentation just creates unnecessary arbitrage opportunities that we don't need. They're embedded in the system. So what I'm saying is, yeah, maybe you don't need one stock exchange, but you certainly don't need 11. And in fact, if you look at the numbers today, volume migrated over to 4 other exchanges, and 4 different exchanges didn't even pick up volume. So I would suggest that any exchange that has 3% market share or less doesn't deserve to be a protected quote status and doesn't deserve to be an exchange.
Cory, what's your take here?
Well, I think what Joe's alluding to are some systematic changes. There's a reason that the New York Stock Exchange has engaged in this massive technological upgrade, and it's purely to chase after the revenues provided by high-frequency trading. So they've gone through enormous changes in their hardware, in their software, in their physical infrastructure, and in the rules themselves to try to allow high-frequency traders to try to bring them into that exchange.
But is the code up to date?
Well, it's not so much about it being up to date, right? So they're going to have problems the more they have to update their systems. But their systems are needlessly complicated by their desire to get revenues from high-frequency trading. So they have added so much technology and so much software and so much hardware in very short order time when they're fighting against this tidal wave of high-frequency trading because they want those revenues. Their basic goal of providing a fair and orderly market for the trade of listed stocks looks, at least today, to be secondary to responding to technological challenges of being high-frequency traders. And that's leading to a problem that's, we're not going to see this for the last time here at the New York Stock Exchange, because they're spending so much time and money on changing their technology to deal with this high-frequency trading that the average trading of stocks and equities of listed securities are just not the first order of business down there.
So, Matt, hang on a sec, Matt. Hang on a sec, Matt.
There's no evidence to support any link between high-frequency trading and the glitch that we saw today.
That's what they do, right? That's what they're doing in the New York Stock Exchange, is responding. They're making technological changes to respond to this. You can't say there's no evidence.
Yeah, but Cory, ARCA still worked. ARCA was still online. The only problem was with the floor volume today.
The floor brokers. The floor brokers responding as well. Totally fair. But the floor brokers responding also to that same thing. The reason their systems are so much more complicated than they used to be is because of HFT and nothing else.
All right, Matt, hang on. Cory, hang on. Yes. Joe Greco, you jump in here. Is there a role for human beings in a world where the New York Stock Exchange and other exchanges are relying so heavily on technology, human traders?
Absolutely. And in the very least, the humans represent that insurance policy that can be explained in the exact instant at 11:30 this morning when people don't know what's going on and they need to wonder, my order is marketable, am I going out to other market sites because the NYSE is down or unavailable? Or two, my order is away from the market or it's a GTC order, am I going to just get elected all of a sudden, or is the system going to get turned back on, and am I still protected? So having a human looking at that is of significant value, especially in times like today. Most importantly, though, and this speaks to what Matt alluded to earlier, you've got leadership at the NYSE that's, one, young and fresh in Tom Farley. Two, they get it and they understand that the market is free. So I'm really sorry, Cory, but you know what? The market is dictating where the exchanges are going, and that's down in Washington. So don't necessarily throw the bullseye on the back of the NYSE. But, I mean, Facebook IPO, that was a face plant. Meanwhile, the leadership of the NASDAQ is out in California high-fiving each other, and they don't even know why their systems failed because they didn't know the opening platform and then the continuation platform were on different servers, and they didn't want to communicate. But that IPO never even got off the ground. So every exchange has some sort of glitch or issue. What really rises to the top is when the leadership takes control and immediately rules out all the things that make everybody run into the panic room, like, is this related to the Wall Street Journal? Probably, because everybody went over to the Wall Street Journal to find out what was going on. But is this related to United? Not at all. Is this related to China? No evidence of that. The FBI comes in, the NYSE looks at everything and says, look, guys, come out of the panic room, recognize we're not going to turn the power back on here until, one, we isolate what the issue was, two, we remove it, and we're sure that the systems, when they go back on, are going to run until the close. That would have been at any given day, in particular on a day when the closing bell means stamping the price for S&P and Dow Jones indices. And that's really great leadership. And getting out there when the time was right and talking about that and having humans disseminate that message, I think you know you can't get that from an algo, and you know you're not going to get that when you're pure electronic. So having that element at least present, even if it's a small market share, is really important in times like this.
All right, I'm going to let you guys continue this debate off the air, okay, Cory?
All says the New York Stock Exchange doesn't have to do everything the market wants it to do. It could draw the line.
All right.